Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we're here with a daily Forex market analysis and live trading example webinar for you. And before we get into the webinar, we're going to just pull up our disclaimer real quick to remind you that this is for illustrative and educational purposes only. Now, we have a lot of trading signals that are active in the Forex environment right now, and we are going to be covering signals in the euro, the pound, the yen. We're all across the globe. We have lots of patterns and signals for you. So a lot of them are also high probable Japanese candlestick patterns, which you can read about in the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. So here we are now. We are going to our live action screen here at our www.forex-trading-unlocked.com website. We have our market analysis workstation page already pulled up, and we've already started to put some things on here for you. We're going to start with the euro US dollar. Now, we know the dollar index has had a little bounce over the past couple sessions, and one of the main reasons why is because of the big turn in all of the major crosses. So, first of all, euro US dollar 2 sessions back set a bearish engulfing line sell signal, which has the market targeting the $10.28 to $09.37 area. That's what you can see highlighted between these dashed tannish lines, or orangish brown kind of lines, whatever. We have been making consecutive higher move highs and higher move lows. Should we go down into this area, that would be a nice size correction. But overall, remember, this market has been in sideways since the beginning of the year. In fact, why don't we put, we have, here is December 31st, here is January 1st. So we're going to put December 31st. This is where we closed out the year. Look at that. The euro is exactly where it was when it ended 2019. Isn't that interesting? During that time, for the most part this year, it has traded below this area, only spiking above once to set a higher high up here at, what is this? This high was 114.95. And now we have a high at 114.22. So we fell short of breaking out above that. Now we are hovering right around this little support area. Now, as you can see, markets tend to go out like they come in. This market rallied through here, spiked, and fell through. So now we made a lower move high in the longer term, meaning that if this market is set for sideways and this bearish engulfing line sell signal are coinciding at the same time, it gives us a good reasonable expectation that this market would gravitate back down towards this $10 area over the next week or so. Now, remember, it has been on a nice run up here since the middle of beginning to middle of May, going into June. But outside of that, we were in sideways for basically 2 months, and I think that's probably where we're most likely going to get back into, is this range down here. So short term, we have a sell signal which is targeting $10.28 and $9.37. Coinciding with this is a British pound US dollar bearish engulfing line sell signal as well. And now here, this is the interesting thing that we're trying to figure out for the majors. Now, if you go on, we already have, if you follow our signals, which you can get access to through forex-trading-unlocked.com, just go to our signals page. We'll cover that in a second. You can see that we are short the British pound US dollar. We had shorted this last week after this major bearish engulfing line. However, the euro wasn't really looking as strong as that one was, and there was a lot of divergence going on. So we basically just loaded up on this. We haven't used any binary options yet for the week because we're just starting the week out. We're looking for some good pricing and to see if these will coincide with some of our signals. However, this does go together with the dollar rally going against most of the currencies. So simultaneously, we had a bearish engulfing line sell signal in the British pound US dollar, just as we did in the euro US dollar. Now, this has had quite a run up also since the middle of May, but not quite as much as the euro. This market's stock basically quieted down at the end of March and then set a sideways tone, of which it's just basically been kind of oscillating above, setting a higher move high after it set a lower move low in the range. But overall, we're kind of bullish. So at least in the intermediate term with this market, just because of what's going on. But now take a look at this. As you can see, this trend line here, if we take this low and this low back here, that was our stopper off the big slide from the break that we had in the pound US dollar. We have our sell signal. We're coming into this rising upward sloping support line, which gives the market obviously support. And also we have this trading band of $1.2437 to $1.2347. So the initial target for this bearish engulfing line sell signal off of this low right here is this trading band right here, which we've already touched into today. We haven't touched $1.2437. The low of today is $1.2454. So we're still hanging in on this sell signal, and but now it is touching into our target zone. As soon as it does, we will have a break-even stop put in because of the fact that we're looking for it to kind of come down into this area. Should it bounce and this upward sloping support line hold, that means we'll be setting a higher move low, and then we'll be making a run for the high that was set just a few sessions back. So this key area here at $1.2817, should we reverse gears and hold support where we're at right now at this initial target line, this would be our breakout period, breakout level for an upside move. Now, if we look at, let's see, if we take this trend line here, which goes back to December, and we'll drag this a little bit like this. If you see this, look at what we have. We have a cross. So this sell signal came in right before we touched downward sloping resistance, which is keeping the major bear trend intact. So we have an intermediate bullish trend, bullish to neutral trend, but a longer term bearish trend. And now our short term sell signal has us leaning on critical support. And then if we take this out, then we are really in a good shape to probably take a challenge test of this $21.12 to $19.37. Now, what happens if we fall into this area? Well, then that takes us off the pound as far as being a bull versus the dollar for a while, because if we set a higher move high and then we take out this low, making a lower move low, we're definitely in a neutral bias for the pound US dollar. So as far as finding dollar weakness and dollar strength, right now we do have a short-term corrective move in the dollar that started at the end of last week. These signals are coinciding, and let's see how they evolve over the week. But right now we're going to ride the dollar bull for the next couple sessions, but we are going to see this critical area. Should this hold, this would be the thing that could put the reverse gears on the US dollar rally that's in place right now. Now, since we have the sell signals in the pound versus the dollar and also in the euro versus the dollar, let's look at the US dollar Swiss. Well, we do have another buy signal here that occurred a few sessions back. And if you read the book High Probable Japanese Candlestick Patterns, then you will know what that signal is. So we're trying to get you to encourage to at least read it on the Kindle, and so this way you can follow along with these videos even more. This one is not quite as reliable as the ones that we just covered. This is a high probable Japanese candlestick pattern, but this is much more likely going to set up for a corrective move, which coincides with our current, the dollar is in a corrective status right now, at least for the past few sessions. And especially with the way it's looking with other currencies around the globe. We're starting to see not necessarily the dollar is going to be a bull, but the dollar has been beaten up for quite some time over the past month and a half and really hasn't had much support. So now it's giving it a chance to get a breather, and then we'll see probably just going back to big sideways, because a dollar rally right now doesn't mean a dollar is strong. It's just putting it back into its trading range where it's been for a while as far as the index is concerned. So as far as the US dollar Swiss, we have a short-term buy signal. However, this market's been very choppy and very neutral since March. I would be very leery of this one right now. I think until we have a much better gauge on what's going on globally. We have, obviously, there's a mess in the United States. The rest of the world is just coming off the coronavirus stuff and coming back online. But obviously, we know that in the U.S., there's nothing but all kinds of civil strife going on all across the country. And these are things that are going to weigh on the dollar to some degrees. But then also, there's also the coronavirus, how the U.S. is coming out of that, which is helping things as far as economic numbers. So the geopolitical spectrum is relatively quiet across the globe, or is it? Because it's just in the U.S. all we hear about is coronavirus and riots. So, but this is stuff that is going to make the currency markets stir. We've had a big bond rally that happened last week, and this is something that currency traders need to pay attention to, is the fact that interest rates want to go higher no matter what the Fed's doing, because especially under the situations of what's going on right now, who's going to lend money for nothing and basically get no return on a risky investment especially going into companies when it comes to the corporate bond market, as far as them having the ability to pay these bonds back, especially if there's another shutdown or the continued civil strife that is going on in the United States. There's definitely most likely going to be in the smaller business community, the Russell 2000 and those indexes, I would say probably over the next year they're going to have a very bearish turn of events. You can't look at the NZDAUD as the driver or an influence as to market direction. We're going to have divergence in the stock markets, and we're going to see it in the currency markets as well. So with that being said, now let's go on to our next currency, which is going to be the US dollar, Japanese yen. So, and let's see what's going on there. Now, the US dollar JPY was going sideways for quite some time versus the dollar. And then all of a sudden, over the past couple of weeks, look at this, up and then down. So initially we had, this is kind of funny because we have two high probable Japanese candlestick patterns on here, but actually there's three. This rally here, so see how this low here, this red day right here, and then followed by these two positive days. This is another this is actually one of my favorite buy and sell patterns that you can have for as far as high probable Japanese candlestick patterns. If you read the book, High Probable Japanese Candlestick Patterns, you will find out what it is. Or if you subscribe to our YouTube channel and keep on watching, we usually do highlight this one, but since we have so many signals today, we're just going to focus on the current ones and not the old ones in the past. So you have to go look at our old videos for that or read the book. So anyhow, this signal hit up into this area. It hit the target. And then we had a bearish engulfing line sell signal that occurred a week and a half ago. And then that came down and hit its target and ran out of its gas. And now the funny thing is that we're coming on here. We made a higher move low with a bullish engulfing line buy signal that had occurred on Friday. So now we have basically no follow through today. We're unchanged. The question is, does this bullish engulfing line buy signal put the brakes on this one? Well, from the short-term rally, we hit the points for this one. That's already been done. So this sell signal, it's already complete. Does that mean that this market's not going to remain bearish? Absolutely not. However, with the US dollar rally going on against the pound, the euro, the Swiss, and multiple other currencies, the yen, even though there's been divergence in that, and especially if you look back here where the market went nowhere while those other currencies were swinging, right now dollar strength seems to be pushing and helping to lift this market up. So let's go in the other part of this trading zone and see if we have any other correlations, which actually we do, that also will fall in sync with this. So we're going to go to the Australian dollar, US dollar, which ironically enough, we have had also a sell signal that has occurred. Now we're just waiting for this to load. There we go. All right, so we had a bearish engulfing line. See, all these, we had the basically engulfing line madness going on over the past couple sessions, which is a big deal because usually when you have engulfing lines, whether they're bearish or bullish, it means it's a very big, powerful signal. And when you have them coincide with multiple markets that had not necessarily been trading in tandem, but at this, when you're going versus one currency like the dollar, that just shows how strong this the reversal of fortune has been for the dollar traders, meaning that the dollar index and the dollar bulls are, over the past few sessions, they've been on pounding that direction. Now today, obviously, we have a little bit of a pullback. Interestingly enough, just like we had with the pound, we have the Australian dollar has been rallying since March. However, it has been in an overall downward market. Well, except for now because of this correction here, it's taken us off the major bear market scenario. So we have two short-term, we have two downside targets here. Short term, we have this one, which we had probed into, excuse me. Got a little tongue twisted there. 4 down to 67.19 support band. This is our target area for the initial engulfing line sell signal. And then we have upward sloping support that comes right into this target band. If this is just a slight correction now, then we've already hit it and the signal is over. So there's not much to actionate. There's not much that is actionable for this trade right now, unless this longer term downside target is the true area where we will go to. Now the question is, since this market has been so strong versus the dollar, can it remain so? Well, there's all kinds of variables where The other markets had bounced and gone sideways. This one had been going north and north and north, continuing because China had been ahead of the curve, supposedly, and that was big for Australia and New Zealand. And that was probably one of the main reasons why the Australian dollar was going up versus the U.S. dollar, besides the fact that oil and certain raw commodities that come out of Australia and demand by China, this was driving that rally, most likely as far as fundamentally. Now the question is, are those fundamentals solid and are they real? Well, with new surges in China and other political issues they have going there, we may see another shutdown over there. And obviously they would probably be ahead of the curve. And if this is the case, this is going to impact the Australian dollar once again, where we could very easily see the Australian dollar, US dollar down in this support band here, down at 62.83 down to 60.96. So this is a big slide here. It wouldn't take it as deep as the initial sell-off had occurred when all this coronavirus stuff hit. But remember, we do have what's going on in the U.S., so that's probably not going to have coronavirus slapping the U.S. around as much as it did, especially because of the way the numbers seem to be holding and stuff. But we do have a short-term sell signal in the Australian dollar, U.S. dollar, and ironically, a market that has been somewhat in tandem through this whole thing, not completely, but recently has. The New Zealand dollar, U.S. dollar also has a sell signal. This one here targets the 62.53 to 61.62 area. And this is where it kind of has me wondering, like, is the Australian dollar going to be the dog that wags the tail or the tail that wags the dog? If these markets are in tandem, then as the New Zealand dollar presses towards this target range, and if it does get down here, most likely that's going to mean the Australian dollar, U.S. dollar is leaning on support as well, unless we have divergence. We could always have the Australian dollar, like I said, it hit its target. It could rally, and then the New Zealand dollar could continue to break. These currencies don't have to go together. So this sell signal is still actionable and live. So we have something, the risk-reward ratio is still there. So this is another one that we're looking at. We're looking at options on this one right now. And now we're going to go to the U.S. dollar TRY. The U.S. dollar Turkish lira had given us a nice little buy signal, 3 inside up buy signal. Hey, does this look kind of familiar to something we just looked at, but we didn't tag in what it was called? See how this low is here with this red day, then followed by these 2 slight positive up days? Looks very familiar to one I didn't give you the name of in the last couple markets back. So once again, subscribe to our YouTube channel and then you'll be able to watch it and find out what it is. So this one here is targeting the $6.9760 area to $7.0453 area. Right now, this market's been in obviously an overall bull mode. This is just a corrective slide right now that we're looking at least as far as we can see. And I would say that only if we take out this low here that we had made a week and a half ago would we be bearish. Otherwise, this is viewed as just a quick downside correction, and we're looking for the bulls to continue to press higher. Meaning, this is another thing that's supporting the U.S. dollar rally. So let's go look at the U.S. dollar Mexican peso. The U.S. dollar has fallen against the peso over the last few weeks. However, we had a bullish engulfing line buy signal last week. We had caught some options on this at the end of the week last week, and then caught this nice little move here on Thursday. That was fantastic, and just got out of that ahead of schedule in front of Friday. And we were really happy, although we didn't even need to because we were in down here at the 6 level. So right now, we do have this bullish engulfing line buy signal. Now remember, markets like the Turkish lira and the Mexican peso have very wide spreads and are not as liquid as some of the other major currency crosses. So unless you get in on these signals and have a lot of experience trading these markets, I would stay away from them, but it doesn't mean you don't look at them to get a guide for market direction. So once again, we're seeing the lesser currency crosses of the majors are starting to fall versus the dollar and have set some nice little patterns. And the more we continue with this momentum, especially now that we've established lows, we made higher move highs and higher move lows. The question is, can we still get that momentum to get at least one more higher move high and push us towards our target, or lower move lows, and conversely for bearish trades. So this one here, once again, we have this target at 23.62 pesos to 24.13 pesos to the dollar, which would put us right into the bottom area of this consolidation range where we were just a month and a half ago. So that's right now where we're looking for an upside move. Probably not going to happen over the next couple sessions, but is definitely something that we're looking for to happen. Now here we have an interesting thing. As an old adage is in trading and charting is that all gaps eventually get filled. Well, this gap finally, after this rally, got filled, and then look what happened. Boom, we had like a balloon underwater, big buy signal. Now this one here, what is this? Well, here's a low here, and then if you look at this, it's a bullish engulfing line. See, we've been talking about engulfing lines constantly. This is a bullish engulfing line. Now this is a corrective rally. Have we hit the target? Well, you're going to have to read the book, High Probable Japanese Candlestick Patterns, to figure out what your target would be on this one. So this market we're going to leave open for you, for all of you that have hung on into the video so far. Hopefully you subscribe to our YouTube channel, Forex Trading Unlocked, and are on Amazon checking out our book, High Probable Japanese Candlestick Patterns, so you can see how you can trade these buy and sell patterns in the Forex markets, as well as the futures markets, the options markets, and all kinds of other markets. So since we are looking at the US dollar Canada, and I guess I don't want to be too much of a tease, so let's just take a look in a long-term thing. Now that we've filled that gap, let's just say that we're getting just a short-term correction in the dollar. But what if the correction in the dollar actually is just the beginning of a turn in the dollar that may last for the next month to a month and a half? Where are we going? Well, we're going to use old Fibonacci here and see if this is a harmonic low swing point, and we are actually getting ready to. Now we've been making lower move lows, lower move highs, and that's what we've been continuing to do. So we are in a bearish trend and have been since the middle of March. But should this be the bounce point? We're looking for a rally back up to $1.30, 39.86, area to a $1.41.5 area, which puts us back into our consolidation range. So we have a trade here for the US dollar Canada. Now, if let's just say that this is a smaller move, what can we expect out of this one? Well, this is where we have to look at, oh, look at this. We are right in front of the key resistance. So if you want to know where key resistance is, we use Fibonacci here. This little area here would be it. So if this dollar is only in a corrective move, we have a couple currencies that are hitting these smaller buffer areas. If this is the buffer that holds them in place, then these other trends should remain. However, if these get taken out, then these other big areas here is where we're targeting, and we should most likely see a continuation of dollar strength. Let's go back to the Euro US dollar, where we started off with, and see if we had any action. Well, since we've been talking, you can see that it is still positive and going against our signal. And then we have the British pound, US dollar, which we have the FX position on, and we are short, and we held over the weekend. Well, as you can see, it's up, but not really much on the day. So it's still only slightly positive on the day. It opened much lower. It did tag that area. So we'll see if this dollar strength is just a short-term little sell-off, or if it's the beginning of a new wave higher for the dollar and a big wave lower for all of the major currencies versus the dollar. So with that being said, I want to thank you very much once again for hanging out for our video here. And check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also always check us out at www.forex-trading-unlocked.com every day for your Forex trading.